Titan is the top Nifty loser after an underwhelming first quarter business update where jewelry sales were hit by weak sentiment. High gold prices grew just about 8% as against Kalyan, which grew at 29%.
Tata Motors top Nifty gain after Jaguar Land Rover shows strong growth in the first quarter. Brokerages JP Morgan and Macquarie both issue bullish calls.
FMCG is the top sectoral gainer led by Marico and Dabur as the first quarter business update implies a pickup in demand and volume growth. And the Met says that monsoons this year will be normal after the rains in Mumbai.
Bank of Baroda corrects nearly 3% after registering its weakest deposit and loan growth in 12 quarters. The bank has lost market share in the first quarter. Hello and welcome to Chartbusters. I'm Raj D'Souza. Joining me as always is Mangala Malu. And as we speak, well, the markets are more or less flattish with a mild negative bias. But let's get straight to the first management that we have on the show. Man Industries, the stock is surging. They won an 1,850 crore order, which it says is the largest in its history. The order is expected to be completed between 12 to around 18 months. To help us out with further details, we're joined by Mr. R.C. Mansukani, the chairman at Man Industries India, who joins us. Hi, Mr. Mansukani. Good morning, and thanks a lot for joining in. First of all, congratulations. You know, in the last 2 years or so, you've seen a sharp rebound in business. So that's good news. But now the stock price has moved up. So the street would like to know, where do you go from here? Now, this 1,850 crore order, we've got the timeline by which it has to get executed, which is 12 to around 18 months. So most of it is provided. Could you tell us what is the margins on this particular order itself, 1,850 crores? And what does it do to your guidance? You know, for the year earlier, I think you were guiding for around a 20-25% growth on the top line with margins in the vicinity of around 10%. Now, will you want to upstage that?
Yeah, good morning. This order we got from international bidding and the well-reputed oil and gas company. And this is an offshore project. The offshore is a very high-end uses of the hydrocarbon sector. And this is a specialty coating where the high margins are always there because it's a very specialized field. We are expecting margin should come up because we announced earlier 10% guidelines. I am likely to improve it because this order is a high value added and higher EBITDA.
Okay.
So overall average should come much higher, whatever we expected and announced. And
how much higher, sir?
Yeah, sorry.
How much higher will the margins be on this order versus your 10% guidance?
Yeah, this would be around 14 to 15% EBITDA. But we have to see the overall, whatever the year gone and what is the lead time and this material and the part of the project will be completed the current year. It will be a little bit carry forward to next year. So overall, but apart from that, we have some other good order also on hand. And overall, whatever we announce, it will be much higher.
Okay, last year, yes. So, Mr. Mansukani, congratulations. You know, it's a really good order. If you're going to be making 14-15%, it's much better than what you're currently doing. So, given that now this order has come as a booster shot, what kind of a revenue growth can you do? I think last year you did around 3,100 crores of revenues. Now, given the kind of order book you have and with this booster shot coming in, what should the revenue number look like by the end of this year? That is FY25. And the blended margins moves up to what? Around 10.5 to 11% or even better than that? Better
than that. And first of all, the revenue, we have changed from last year 3,200 and it should be roughly 20 to 30% growth expected current year. And the next year, because of our other companies also going to start some projects, we are coming up in Jammu and some in abroad. So all will come in the 25, 26, which we are expecting 100% growth. Approximately, we are trying to achieve 100% growth in next 2 years.
All right. No, sir. I want to clear the air over here. 20 to 30% top line growth for FY25. Is that correct?
Yes.
Okay. And in FY26, I think earlier you were talking about around 6,000 crores of revenues in FY26. You're maintaining that, so it will be double of what you did in the last financial year, correct?
Yes, sir. Yes, sir. You are right.
And And margins, earlier you were talking about around 10%. Now you said that the margins will be better. So give us a blended margin number. For FY25, what will it be? FY26, what will it be?
Yes, so it's very fair. Will be blended number will be 11 to 12%. And 25-26 where we will try to maintain more than 12, average out should be 12% plus.
All right, so 26 will be 12% plus. You spoke about a couple of, projects coming on stream and that growing your business. So I just wanted your thoughts on two things. One is the stainless steel facility. When does that get commissioned? Is there a delay on that? And secondly is the emerging hydrogen transportation market. When does that start flowing into your revenue? How big is the opportunity here?
Yeah, regarding this Jammu project, stainless steel, we are expecting to start the production 25. Maybe the financial 25-26. The early 25, we are expecting the work is going on. The equipment's order, some developments also there. As well as you are talking about the hydrogen. The hydrogen, the most important, we are comfortable to manufacture, all tested, we got the accreditation, everything. The hydrogen pipelines in worldwide little started because it's a new energy, a future energy. And we kept ourselves ready to come the more boost. Their boost will be next 1, 2 year, 3 year continuous. Depend on country to country, which country adopting first, which later on.
So for hydrogen, you are ready right now. There is nothing which has come in terms of revenue. You are looking at that as an opportunity over the next 2 to 3 years. But on stainless steel itself, you said...
No, sir. No. We participated some tender in the world market already for hydrogen. But which will come in slowly will come, and then it will be, pace will be much more higher next year onward because a lot of countries, they are doing.
What is the size, sir? What is the size? How many tenders have you participated in? What is the order that you've won?
Yeah, right now our bid book is 1.5 billion US dollar in international market. You can say 12,000 crore approximately.
Okay.
And how much of that is from green hydrogen? This hydrogen pipe that you're talking about?
Maybe 4 or 5 projects around 2,000 crore in beginning, is a beginning.
Okay, all right. And the stainless steel business that gets commissioned, the stainless steel division gets commissioned in the early part of FY26. Is that correct?
Yes, sir. And their EBITDA will be higher because we have to consolidate it. That's why the overall EBITDA will be improved.
Got it. All right. And what could you tell us? How is the debt looking in books? The finance cost, if I look at it for the last year itself, that had moved up a little bit. But you have other income as well, that corresponds to it. Finance cost for the last year was around 90 crores. You had some equity infusion as well. So you maintain that you're virtually debt-free. So explain this to us. Is this the working capital or what is it? Short-term loans?
Working capital, mostly working capital because we are bidding in the higher amounts and higher volumes. That's why our bank guarantee charges, LC charges, ABG charges, PBG charges are high, which we are trying to control now. But because of the volume is increasing, that's why justifying. There is not a very big loan on the company, although we are a cash surplus company. Still we have the cash surplus and the net surplus in the 2024 balance sheet. And the debt is very minimal.
Right. And what about CapEx? Since you're speaking about higher orders coming in, higher capacities coming in, what is the CapEx that has been lined up for this year and what's the plan for next year?
Yeah, the total CapEx through our subsidies company is around 1,400 crore, which will be completed, which is ongoing 23 also, 24 also, and 25 will be completed all the projects. And then yield is going to start. That's why we are announcing should be guidance is around double the revenue of 24. That's why we are announcing next 2 years.
So what is the capex for this year then? 1,400 was for 3 years together. How much is pending? Do you?
No, exposure we have taken some LC, etc. The equipments, LCs, etc. open. And this year again will be 300, 400 crore. And our cash generation is good enough. We are not taking the new loan. But the subsidies company, they are taking loan on their own strength. And it's all the tiger.
And the stainless steel plant you said, which starts early next year, how much will that add to your revenue? What is the asset turn here?
In the first year, we are trying. In the first year, we are announcing 800 to 1,000 crore, the additional revenue, and as well as to some other our exposures will be around 1,000 crore, and this company will continue growth. That's why we are trying to reach 6,000 crore in next 2 years.
Got it. All right, Mr. Mansukani, congratulations. You have come back, from difficult times in the last 8 quarters or so. We wish you all the best, and we're going to hold you to these numbers. 6,000 crores in FY26. In FY25, you're guiding for a 20 to 30% growth with margins upscaling from current levels. Thanks a lot for joining in.
Thanks.
Well,
thanks
for the time being, we slip into a short break. On the other side, we have another management waiting for us. The MD and CEO of Dhanlaxmi Bank will be joining us to tell us about their Q1 business update.
Welcome back. You're watching us here on Chartbusters. One of the stocks that busted the charts on Friday was Dhanlaxmi Bank. The stock was higher even as the company, registered weak loan growth in the first quarter. We had a big uptick in their gold loan book itself. We have with us Ajit Kumar KK, the MD and CEO of the company, joining us. Thanks a lot, Mr. Ajit Kumar, for joining in. You recently were appointed as the MD CEO of the company. So the first quarter so far, the 10 days that you were at the helm, they've been good, especially on the gold loan front. So let's talk about your target for the bank for this year and the medium to long term later. But for this year, what's the kind of loan growth that you're targeting along with the loan growth in your gold portfolio?
Good morning and thanks. Current year, in Q1, the numbers were quite good. Sequentially, we have grown in all major areas like advances, deposits, and with gold Y-on-Y growth recording almost 29% growth. The current year, we are forecasting a growth of around 15% for the loan book. Last year, we had grown just around 6%. So currently, the growth of around 15% in loan book and the total business growth of around 14-15%. Liabilities around 13%. That's what we look at. Gold, definitely we are looking for more than 20% growth during the current year. And that is one area that focus is always there. It had been there and we continue to look forward for that kind of growth. Also, the NPA book is coming down steadily with the industry at 12-year low of 2.8%. I'm sure that our bank has also been showing a very positive decrease as far as the NPA book is concerned, which is going to continue in the near future as well.
All right. Hi, Mr. Kumar. First of all, welcome to the show and congratulations on taking over the bank. We wish you well in the years to come. We've got the number out in terms of loan growth, mid-teens growth, with gold outpacing that, and liability growth, I think I heard, was around 13%. Now, since you touched upon the asset quality, could you tell us the net NPAs as well as the gross NPAs? Where do you see it move? The last recorded number we have on gross NPAs is 4.05%, which is an improvement from close to around 5%. So by the end of this year, FY25, where do both these two numbers go?
Our expectation is that it is definitely going to be somewhere around 3. It will be less than 3% for the current year. And the net NPA also will be less than 1%. That's what we look at for the current year. Since the last 2 years, every year we had seen a 1% decrease in GNPA. This year also we expect a more than 1% decrease in GNPA as well as the net NPA coming down to less than 1% maybe after a very, very long time.
All right. So net NPA sub 1%, GNPA sub 3%. This number was closer to 4% at the end of the previous financial year with 15% loan growth. What does all of this mean for the margins at which the margins you make on loans? The NIMS target going forward, since gold is going to grow faster than your overall book, 15% loan growth at a time when interest rates are higher, cost of funds are higher as well. So what is your NIM target for this year?
The expectation is that from the current level of around 3.2, I think we expect it to go up by another 20 basis points, maybe somewhere around close to 3.4. That's what we look at.
All right. The problem is, Mr. Kumar, I think there were some bonds that saw a downgrade by CARE in the last week or so. Could you comment on that? And in turn, when you see a downgrade, sometimes the cost of funds goes up. which in turn could have an adverse impact on NIMs. Your comment on this?
Yeah, definitely. If any downgrade will have some impact, that's for sure. But as far as we are concerned, we are looking at certain Tier 2 bonds are getting matured in the next financial year. And we are sure and confident that those can be got replenished with almost at the same cost, we'll be able to replenish it.
So in light of that, how will NIMs increase? I mean, are you looking at your yields on certain assets increasing? Because even deposits are difficult to come by currently.
Yeah, I think the indication that we have during the Q1 growth is that because we have got the benefit of a small base, and if we have got a network, the bank is quite well known in the regions where they are significantly present, and with these in place, I'm quite confident that our focus, because we have got our book, corporate book is not significantly high, it is somewhere around 20 to 25%. So we are not planning to increase the corporate share. Our focus will be on MSME, gold loans, to an extent, small segment in micro. And if we focus on these areas where we are traditionally strong, and if we are able to encash on this by improving the processes and coming out with new products, and because our book size for MSME is just around 2,000 crores, so if we are able to significantly improve, that's where we get higher margins. And if we can deliver credit at a faster pace, I think I'm sure that we'll be able to meet the NIM that we are budgeting.
You briefly mentioned cashing in. Given the kind of rise that we've seen in the stock price, which has more than doubled in the last 1 year, any fundraising plans?
Yeah, we have got an approval for capital raising through rights issue for 300 crores. And in the next couple of months, we plan to go ahead with this, and everything is in place to take it forward.
All right, so 300 crore via rights issue. Just wanted to know, if you get that 300 crores, what does that do to your ratios, your CRAR and the Tier 1 capital?
I think Tier 1 capital will definitely be somewhere around 14%. And with a mix of Tier 2, we'll be crossing more than 15%. And that's what we are looking at. Currently, we are at 12.71%, well above the regulator benchmark. But capital is something that is required for our growth as well as for meet other requirements, while we are aiming for a steady growth in the next 2 years, much more than what I've been growing during the last couple of years.
And finally, just before we let you go, we got most of the numbers out of the way. The two numbers that we didn't, one was the slippage that you're targeting or looking at this year, and what's the kind of credit cost guidance that you have?
And slippage, I mentioned the gross NPA will be around 3%. So we'll be looking at numbers, absolute numbers. Currently, the number is at around March, it was 421 crores. We are looking at a number of around 350 crores gross NPA figure. That's what, including the strengthening our collections through our existing book as well as through the technically written off book. I think we'll be able to meet a gross NPA number of around 350 crores, which will be take us to a NPA GNPA percentage of 3% on an asset book of approximately 15,000 crores.
Okay, Mr. Kumar, we look forward to you joining on the channel far more often as well. You've been, you've patiently taken all our questions and given us some answers. We'll hold you to these guidance. But until next time, we wish you well and we look forward to having a chat with you as the quarter progresses. For the time being, slip in a short break, come back, continue our focus on markets and stocks that are moving around. Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, it's a good time to get you some ideas for profit from Money Control Pro. Anubhav Sahu of moneycontrol.com joins us to talk about a stock that he's tracking closely. Anubhav, take it away.
So we are looking at chemicals as one potential sector which can benefit from policy push towards import substitution in the upcoming budget. Now, it is in this regard we prefer Balaji Amines, which is a leading play on aliphatic amines. Stock has been range bound for last 18 months, but warrants attention given upbeat Q4 performance, given pickup in volume growth and EBITDA margin of 25%. Now, company sees better demand environment along with the easing of destocking headwind and pricing pressure from China. On the back of that, management expects minimum 10% volume growth and EBITDA margin range of 21 to 24% in fiscal year 25. In addition, a series of projects are getting commissioned in coming year. This includes methylamine capacity, which would nearly double by December 24 and would be captively utilized for derivative products. Secondly, upcoming electronic-grade DMC and dimethyl ether plants would cater to lithium-ion batteries and as a blend with LPG respectively. Further, 750 CR capex announcement for the ethylene diamine derivatives is another growth lever to watch for, wherein lean balance sheet provides a scope for fundraising. Now, while this adds to earnings prospects, stock trading at an EV by EBITDA of 14 times fiscal year 26 estimate is not demanding in our view.
All right, that's an idea for profit coming in from our colleagues at Money Control Pro. But as you can see at the top of your screen, all the frontline indices are now moved into the red, slightly deeper than what we were at the start of the show. But the FMCG index doing extremely well. With that, we'll wrap up on this edition of Chartbusters. Thank you for watching. Trading Hour comes up next.